Hi, and welcome to the lecture number 10 of the Star Tax Transfer Pricing course. In previous modules, we were studying transfer pricing principles, methods, and approaches in general. And now we will explore how transfer pricing operates in particular transactions. We will start today with intra-group services, as this category of transactions combines several other more complex issues, and we're starting with services in general before moving to specific services transactions. So we will discuss today what are services in general. We will look at transfer pricing and tax issues surrounding services, including benefits tests and non-chargeable activities. We will look at centralized and shared services and how M&Es in general organize their intra-group services transactions. We will discuss direct and indirect charging methodologies and allocation keys as well. We will then look at how transfer pricing methods apply to services transactions, and at the end, we will be looking at low value adding services. So what are services? If we look at actual definition, services are acts, deeds, or performances. Services are activities that produce time, place, form, or psychological utilities to its recipients. If we look at OECD guidelines, they define a service as an activity of administrative, technical, financial, or commercial nature for which an independent enterprise would have been willing to pay or perform itself. So what are the main features of services? First, services are intangible and perishable. And services are created and consumed simultaneously. So you cannot store services in advance and then consume them later on, like you can do with goods. And in principle, there is such a definition of services which is opposite of physical goods. So we can broadly say that whatever is not a physical good, but still is an economic value, it is a service. So intangibles, financial transactions, loans, um, the activities within cost contribution arrangements, all of those are actually services. And that's why we start first with services lecture before we move to those more specific cases of services. So services are playing a very important role in modern economy. If you look at current GDP structure of high-income countries, you'll see that the majority of GDP is created in service industry. So around 75% of GDP of high-income countries is generated by services and service companies. And if you look at controlled transactions or transactions between multinational or within multinational enterprises, 35% of those transactions are services transactions. And those 35% do not include, for example, intangibles. So if we would say that intangibles are also a form of services, then this percentage will be even higher. And that's why it is very important to understand how transfer pricing applies in services transactions, because those transactions are often the most debatable and the most material at the same time. So what are the issues surrounding services? So first, when we analyze services, we need not just to analyze the pricing of the services, but before that, we need to ensure that services were actually rendered. And what we are looking at is a service from transfer pricing and tax perspective. And to ensure that the service indeed passes this test, the OECD guidelines and as well local legislation of most of the countries puts the benefit test. So the benefit test is a test that ensures that the service was actually rendered. If the service or the activity passes the benefit test, then and only then we move to defining or to testing the arm's length nature of the service and analyzing services from transfer pricing perspective. And this is quite different from the discussion around physical goods, because in physical goods transfer, we're almost always sure that goods were transferred. We have a good proof point. Goods are crossing physical border of countries. While in services, it's not always obvious that the service was actually provided, and that's why we need to pass the first test. And the second part is analyzing the arm's length nature or the amount of charge for the service, and to ensuring that this remuneration of service provider is at arm's length, and at the same time ensuring that the service recipient did not pay too much for the service. So we'll start with the benefit test. And when we do the benefit test, we need to actually do two things. First, we need to demonstrate that the recipient of the service has actually received it and that the service was provided. And this at the second step of benefit test, we need to demonstrate that the service was actually needed for the recipient and that independent third party would be ready to pay for such service. So let's have a look at the benefit test in more detail. So when we do the benefit test, first and perhaps the most important step is to explain the service that is actually provided. So this includes the characteristics of the service, what constitute the service provided. Then we need to provide proof points that demonstrate the service was actually provided. And what can serve as a proof point? It will greatly depend on the nature of the service that is provided. If the service is maintenance of equipment or transportation of goods, that can be quite easy to demonstrate because you can demonstrate the equipment that is maintained, or you can demonstrate that goods were transferred, and this physical transfer from one place to another, the logistic service, it is much easier to demonstrate because it is have very tangible nature. However, many services can be difficult to demonstrate, and that's where I just put here several examples. So as a general rule, we should ensure that there are contracts and agreements in place that regulate services. And then as a proof point, we can demonstrate the result report, presentations and trainings provided when service was actually rendered, meeting notes, invitations, certificates. So depending on the nature of the service, those proof points can be different, but you should always think from the perspective, how can we prove that the service was actually provided? How can taxpayer make sure that tax authorities will be satisfied and will have comfort that they will not question that the service was actually provided? And then, as a third element of the benefit test, we need to demonstrate that service recipient had a need in the service, or that the service economically benefited service recipient. And the benefits can take different forms. So for example, some services can lead to increase in sales or profit or operability of the business. Some services can lead to reduced costs or increase in market share. And some services are just necessary from the compliance perspective. So again, depending on the nature of the service, the economic benefits demonstration can be also different. Let's have a look at the example of particular service, and let's consider how the benefit test can be applied to the service. So assume there are two entities, and the service provider is a training company within a multinational group which provides training to another company, the service recipient entity B. And the service which entity A provides is a general data protection regulations training. So this is a new regulation which was, well, it's not a new regulation, but this is a regulation which evolves, and European Union develops rules and standards on how companies should work with and maintain customer data. And that's very much applicable to digital businesses especially. And then, assuming there were some changes to those regulations, or those regulations were introduced, and therefore entity B requires its personnel to be trained to ensure that personnel knows those regulations. So first, the explanation of the service provided. We already kind of discussed that on high level, but we need to ensure that there is a good level of detail which would explain the service that was provided. So here you see the explanation of the service. It was a 2-day course that provide an introduction to the GDPR, overview of key implementation and compliance activities, and we have an agenda of that training. Then we would need to demonstrate proof points that the service was actually provided. So we could demonstrate that the trainer or instructor visited entity B and delivered the training. Maybe there were some presentations and materials shared during the training. Maybe personnel of entity B received certificates for passing this training, and all that will be actually the demonstration or proof points of a service and ensuring that service was provided. And at the end, we need to ensure that the service was actually needed, so entity B required this training, and indeed, in this case, entity B was working with customer data and had to comply with GDPR, and that's why this training was reasonable. Yeah, they needed actually this training. So we can conclude that in this example, this service passes benefit test. Let's just now consider there was another training delivered by entity A to entity C. Also, this is all the same multinational group, but now entity C is a company which operates in the US. So the training was the same, and the trainer actually went there. We have a similar explanation and similar proof points. However, entity C works with the US customers, and it does not directly interact with European customers. So since entity C doesn't work with EU customer data, it does not have to comply with GDPR. Yeah? Let's just this is an assumption which probably not always works in our globalized world, but let's just do this assumption for our purposes. So conclusion of that would be that even though that the service was actually provided, we have a demonstration of benefits, of demonstration or proof points that the service was provided. The service was not necessary for entity C, and that's why the benefit test is not passed, and entity C should not deduct those costs of the services for corporate income tax purposes, and tax authorities of the IRS in the US can challenge those services. So those services would not pass the benefit test. This is a general benefit test application, and OECD also demonstrates several particular cases or particular activities which would not pass the benefit test, which should not be regarded as intra-group service. And those include shareholder activities, the duplication of services, passive association, and incidental benefit. So all those four categories of activities are non-chargeable activities because they do not pass the benefit test. And let's now go one by one to look at them in more detail. So what are shareholder activities? So according to OECD guidelines, shareholder activity is an activity which is performed by a member of a multinational group, usually parent company or regional holding company, that is performed because of its ownership interest in one or more other group members. In other words, in its capacity as a shareholder. So those services are not for the benefit of the subsidiary, which also kind of participates in this activity or can contribute to this activity, but this service is solely for the need of the holding or parent company as a shareholder. And there are several examples which OECD guidelines and our textbook also includes. Let's look at one of them to understand what those activities could be. So imagine there is a multinational group which comprise of holding company and three subsidiary companies. And shares of holding company are traded on a stock exchange. And because of that, holding company has to prepare and submit consolidated annual financial statement on behalf of the group as a shareholder. And this is why holding company needs to consolidate basically financial statements of subsidiaries. So it will combine it will acquire financial information it will receive financial information from subsidiary companies, analyze, do necessary work around, and will prepare the consolidated financial statement. So this activity would be a classic example of shareholder activity because subsidiary companies do not need to have consolidated financial statement. They do not benefit from the fact that this annual financial statement on the group level is prepared. And this is why those costs will not be charged, should not be charged to subsidiary companies. At the same time, if one of those subsidiary companies actively participate in preparing those consolidated financial statements, and there are significant costs for those companies associated with helping holding company with preparing this financial statement, those costs should be charged to holding company, and holding company should pay for them because it shouldn't be a cost of subsidiary company. Another example of non-chargeable activity is a duplication. So assume there are two companies and service company provides an IT support to a recipient company. At the same time, recipient company also have an IT staff employed, and which helps recipient company employees to operate their IT equipment, computers, and so on and so forth. So in case those IT services are the same services, so the personnel of service company does exactly the same what recipient company IT personnel already does, that will be an example of duplication. So the same service is provided or received by recipient company twice. Therefore, those same services which are provided by service company to recipient company should be disregarded and would comprise the duplication activity. This is, of course, quite a rare example in practice because multinationals usually are not interested in duplication. This is not, let's say, something which improve the operations of the multinational group. It may happen due to mistake or due to inefficiency, but usually multinationals would themselves be interested in eliminating those duplications, and that's why it's more of rare example comparing to shareholder activities, which we may see in practice more often. Also, specifically, we need to focus on the fact that even though that recipient company may have IT personnel, it doesn't mean that it should not or it cannot buy other IT services from other service recipients. There are hundreds of different IT services and IT support which the recipient company may need, and that's why it will not be a duplication if there are different services. Duplication is all about exactly the same services. And also, OECD guidelines provide an example when duplication can be regarded as a intra-group service and will not be a non-chargeable activity. And this may happen when there is a migration of activity to another company. So assume that recipient company decides to migrate all IT activity to a service company, and then for some period of time the IT support will be provided by a recipient company itself, I mean by recipient company IT personnel, local IT personnel, and also by newly established team in service company, just because they need to operate it simultaneously to ensure that this service company new IT team is properly trained. And that will be a period which will be short in time and will be for the purpose of ensuring that migration is completed properly. And that's where OECD guidelines would usually allow this service to be charged. Yeah, so this will be regarded as a chargeable service. So another example of non-chargeable activity is a passive association and incidental benefit. So assume there is a the subsidiary company, Subcom, which wants to receive a loan from a third-party bank. And Subco have a standalone credit rating. So credit rating is a measurement of how good this company as a loan recipient. So how credit worth the Subco is. And in this case, Subco is granted with a credit rating of BB. And the third-party bank is ready to provide the loan to Subco for 5% interest per annum. Now, Subco belongs to a multinational group, and there are more subsidiaries in this multinational group, and there is a holding company. And due to the fact that the subsidiary belongs to multinational group, it can get a higher credit rating because it can be assumed that other parts of multinational group, the parent company or subsidiaries, will provide some support to the subsidiary in case there are some adverse economic events or subsidiary company cannot meet its obligations. And that's why Subco can be granted with a higher credit rating sometime. We'll be discussing this in financial transactions module. So just because of the fact that subco belongs to multinational group, it can get a higher credit rating. In this case, it's triple B, which is higher than double B. And because of that, the bank is ready to give a loan with a lower interest because this company belongs to multinational group and the bank assesses credit worthiness of subsidiary company being better than or higher than on standalone basis. So this is an example of so-called implicit support, which we will be discussing further. But this is also an example of passive association or incidental benefit in some instance, in some sense. And this should not be a chargeable activity. So if there is an implicit support where other group companies do not provide particular explicit guarantee, but the credit rating is higher just because of the fact that company belongs to multinational group, this should not be regarded as a chargeable activity. So this is an example of non-chargeable activity. No intra-group service is provided in this case. So those were examples of non-chargeable activities which would also not pass a benefit test.